Just about as fast as our market started heating up, it is now beginning to cool off. Whether you are a homeowner or a home buyer, the thought of a housing market collapse is scary. The last thing you want to own is a massive inflated asset when the economy is collapsing. Now, we've talked about what we look for in our market before prices start to come down. Number one is an increase in price reductions. Check. We have had that now for at least 2 months. Number two is an increase in days on market. We've had that as well. And the third thing we've been waiting for is an increase in seller concessions. Well, guess what's starting to go up? So where are prices headed? And is a crash imminent? What should you do if you are a buyer or a seller in the market right now? Let's dive into all of this right now. So it's been all over the headlines, so everybody knows by now that interest rates have drastically increased over the past 3.5 months. In fact, this has been the highest the Fed has raised the rates this quickly in 28 years. So this, coupled with the fact that our prices on homes are so high and our inventory is rising while demand is falling, has put us into a balanced market, and we are actually headed towards a buyer's market very fast. So just take a look at this map. This is from June 26th of 2022, and just about every zip code in the Phoenix area is still technically hot. And now this is just a few weeks later, and this is July 11th, 2022. Now, every one of these zip codes is now in a warm market. Now, you would think that warm still means that there's still a lot of activity. There is activity, but this is when we start looking at we are in a balanced market. Now, when you look at all of these things, and then you have interest rates bouncing around from 6s, then to the mid-5s, buyers just do not know what to do. So the other thing that keeps happening, and it's been going on now for 15 weeks, is this massive increase in our inventory. Then conversely, let's take a look at the contracts accepted, and this number keeps going down. Now, during our crazy market, we were having homes come on the market, but what was happening is that they were coming on and they were going out just as fast. What's happening now is that we are having homes come on and they're actually staying on. So our inventory is starting to build. Now, due to all of these significant changes, guess what? The buyers are now driving the bus. So this is not making sellers happy. And so what you can see from this chart is the increase in canceled listings. It has been pretty drastic as of late. Now, I want you to keep in mind of something when you look at this chart. All of these sellers that are canceling do not have to sell their home. They wanted to sell their home, and their idea is to get in the market and hopefully take advantage of how high our prices had gone. Now, as I said in the beginning of this video, our price reductions for listings has increased significantly. And so as our market starts to turn more to a buyer's market, for sellers, pricing your home becomes even more critical. Buyers during times like this will often wait and watch these homes, and they expect at least one price reduction before the home goes under contract. Now, I know sellers still like to try to price their home a little on the high side to give them room to negotiate. They then wonder, why won't a buyer just make an offer if they like the house? That is just not how buyers operate in a market like this. Buyers want to know that sellers are serious about selling, and a price that's too high says to a buyer, I'm just not that serious. So where are prices headed? Well, I don't have the best news for you because we have already seen about a 4% decrease in our price appreciation. And as you can see from this chart, May 13th was the peak of our pricing. Now, keep looking at this chart because I want to put things into perspective. Now, if you had purchased a home back in June of 2021 to June of 2022, you would have seen an almost 20% appreciation. Now, take that same year over year, but put it to July. So July of 2021 to July of 2022, and we're still looking at a 16% appreciation. That's your 4% gap. But overall, you are still seeing homes appreciate. However, the overall appreciation is starting to show a downturn. So yes, our appreciation has turned down, but it is not a crash. Could we see home prices fall even further? Again, yes, but not a crash. The Cromford report stated this about who is selling. We are not seeing forced selling like we experienced during the foreclosure wave of 2007 to 2011. These are people electing to sell because they fear a fall in home prices. That fear is likely to be self-fulfilling. When so many people attempt to make it to the exit door ahead of everyone else, people get hurt. And these are the majority of the people that are selling right now. People that are second homeowners, flip investors, short-term and long-term rental owners, and oh yeah, don't forget about all those iBuyers who bought all those homes really high and are now having to sell them for a loss. These are the people that are reducing their prices quickly and being very reactionary to the market. Again, these are not forced sales. So if you do not have to sell, you have not lost any money. In an article on Bankrate, their chief financial analyst, Greg McBride, wrote this: a price plateau is more likely than a sharp fall. While the recent pace of home appreciation isn't sustainable over the long run, that doesn't mean prices are at risk of a sharp drop. Real estate prices can move in big spurts, like now, then show relatively little change over a period of years. A plateauing of prices is more likely the outcome. And this is what I've been saying since the beginning of this shift, that we would see this plateau, we would see prices come down a little bit, and then it would probably level off. So now let's take a look at what Lawrence Yun said, who's the chief economist for the National Association of Realtors, in the same article. Yun agrees that no crash is imminent. There's just too much of an imbalance between supply and demand for home values to crater. I would not be surprised if some markets do see some minor price declines. Yes, we have seen that. However, Yun said any declines are likely to be small and healthy for a market that has seen intense pressure on affordability. Yun points to Phoenix as a place where price appreciation has defied gravity and where a minor correction wouldn't cause widespread economic panic. Could it fall 5%? Certainly yes, Yun said. Even if prices were to decline, say 5% in Phoenix, is that a concern? Absolutely not. So what should buyers do in a market like this? So first thing, you have to know you are going to hold the house long term. When I say that, I mean 5, 7, or more years. And if this is you, then guess what? Just like I said before, you are in the driver's seat. You can negotiate on price, repairs, HOA fees, transfer fees, all the things that we've always negotiated on. You can now negotiate on those again. I mean, we are actually back to being able to get the best price and terms. And for those buyers that are really worried about the interest rate, I totally get it. But remember, if you can afford the payment now, you have locked that rate for 30 years. But let me tell you something. I don't know anybody that has kept the same mortgage rate for 30 years. So as interest rates go down, and they will, you can then refinance and make your payment even less. There's a saying, you marry the home, not the payment. But if this is not you, then do not buy right now. Wait and save. And for sellers, I know this happened really fast. Like it felt like it was overnight. And making the right move right now is really important. And it's all going to start with your price. Now, if your home has been on the market for a little bit and it's not selling, dropping the price is not the only option. It's about getting creative and creating a win-win situation for both you and the buyer. So take a look at what Redfin's chief economist just said. Conditions for home buyers are improving. Housing remains expensive, but mortgage rates just posted their biggest weekly drop since 2008, which makes buying a home a bit more affordable. One way buyers can take advantage of the shift in the market is seeking concessions from sellers. That would include asking the seller to buy down your mortgage rate, pay for repairs, or cover some of your closing costs. Now, when a buyer looks at a home, their number one question is, what's my mortgage payment going to be? And sellers often forget they can actually help with this. I mean, new construction is starting to do this, and you as a seller can do this also. What's the benefit to you as a seller? Well, it helps the buyer reduce their monthly payment, and you don't have to reduce your price as much. You will actually walk away with more money. But if you'd like to learn more about that, make sure you take a look at this video right here. Now, if I can help answer any other questions, please feel free to reach out to me. All my contact information is down below. As always, I thank you for watching, and I'll see you next time.